My name is Max Fellman with the Business Teacher's Toolkit, and this is Unit 3 of a 10-part series, Banking Basics. How do students choose and use different types of banking accounts? The objective by the end of this unit is that your students will be able to compare different banking options, explain the features of different accounts, evaluate which accounts best fit their needs, and make informed decisions for their financial future. In this unit, we discuss the following. What is a bank? All about interest, checking accounts, savings accounts, bank research, and a number of different activities. In this unit, there are 4 different activities that will take place. Students will learn how to read a bank statement. They'll create their own bank marketing brochure, and then also reach out to a financial institution of their choosing in an activity called The Call. Also, I've included a unit summary, which is like a study guide that students can use to take notes on, which are guided to help them make sure that they understand the content from start to end. In the first slide that comes up, I ask students to tell me everything that they know about banks. It's kind of an anticipatory set so that I know what it is that I'm working with. Some students come into class with a variety of knowledge regarding banks, and some have no idea. I ask them to start with what their level of knowledge about savings account is, and I ask them to do this in what I call a fist to 4. So it's a fist meaning I don't know anything about it. 1, you've heard of it but don't really know how they work. 2, they know the basics. People put money in it to keep it safe. And then 3, they could explain a bunch of features, interest, withdrawals, and safety. 4, they know everything. They're ready to move on. They could stand up in front of the class and teach the class. And I just have my students hold this up close to their stomach so that I can get a quick gauge on what my students know. Now that I know where my audience is, it's time to talk about savings accounts. I remember when I was growing up, I always understood a savings account as this bank account where I put money into it, and I was hoping that by the time I was an adult, I would have a large chunk of change in there. And I really didn't know anything else besides that. I knew that it was safe. I knew that it was better than stashing it under my bed, but I didn't know the details or ins and outs of what the limitations were and, frankly, what are some better products out there. A standard savings account is a type of bank account that's offered by most traditional banks. They are FDIC insured, which we'll learn about in just a slide or two. They provide easy access to your money, but here's the catch. They oftentimes pay a very low interest rate, which you'll learn more about soon. While this account does build good habits, there are far better products out there to make your money work for you. We define interest as the charge and privilege for borrowing money. The bank will pay us in interest if we loan them money, but if we borrow money from the bank, then we need to pay the bank interest. It's just the fee to borrow money. We talk about the Federal Deposit Insurance Corporation, the FDIC, and how it's in place to protect consumers in the event of a bank collapse that's of catastrophic failure and financial catastrophe, which hopefully never happens again, but you never know. And with that, it insures deposits up to $250,000 per account holder per bank in the case of a bank failure. Another type of savings account is called a certificate of deposit. The beauty of the CD is that oftentimes they will allow you to earn more interest on your money that you have saved than that of a standard savings account. The CD is a fixed interest rate in most situations, and that interest rate is an agreement between you and that bank or financial institution where they give you a set date that you must hold the money in there for until it reaches what's called maturity. Maturity is the date that you and the bank agree upon. It could be a year, 6 months, 2 years, 3 years, 5 years, or more, or even less. Depending on the bank and where the market is at that time, the interest rate will vary. I give students an example problem. I was to open up a certificate of deposit with $10,000 and it had a 3-year term with a 2% interest rate. At the end of the term, my new account balance is going to be $10,612.08. I show them how to solve it the long way, line by line, year by year. And what I do is show them just quite frankly what it would look like at the end of each year so that they know how to do this the long way. And after that, I encourage them to do it much easier, and you'll learn about that in just a moment. So in year 1, they take $10,000 times that 2%. And at the end of the year, they have an extra $200. That $200 goes back and invested into the initial $10,000, leaving them with $10,200 to start year 2. Now, year 2, the $10,200 is multiplied by that 2%, gives us an extra $204. This is our money working for us. And this is what's called the power of compound interest. And at the end of year 2, we have $10,404. That's what we start year 3 with, multiplied by 2%, At the end of the year, we get an extra $208.08, leaving us with, at the end of all 3 years upon maturity of the CD, $10,612.08. That's the long way to do it, but it shows students how exactly compound interest works in this format. The shorter way to solve it is by using the simple interest formula off here on the side, and I show you what all of the different criteria are on the legend for that formula. Now that my students know how to do it the mathematical way as well as the long form way, I show them an even easier way, which is the trick of the trade. And this is what financial institutions and banks are doing. They just use a CD interest calculator. I personally have my students use one from bankrate.com. I've used it for years, and it's just a simple interest calculator. It's online, and that's what almost every banker in the United States is going to be using in a branch. I then give them a CD example. I give them the opportunity to try one of these for themselves. They opened a CD with an annual interest rate of 2.5%, and the account was opened with a balance of $115,000. The term is 2 years long. How much money will be in the account upon maturity? I encourage them to try doing it with the formula first, and then after that, head over to that same CD interest calculator. We move into the discussion of checking accounts. And I ask them, this is going to be a common recurring theme because I want to know what my students know. Tell me everything you know about a checking account and how it works. I also use what's called Pear Deck, which is an interactive opportunity for my students to type in their response. And that gives a voice to the student that otherwise might never raise their hand. I know there's other products out there such as Nearpod and others. After we figure out who knows what about checking accounts, I define it. I give them the definition of a checking account and I share some of the benefits, things like they can deposit a check, they can link a debit card, direct deposit, pay bills, and more. We then move into a jigsaw activity so that we can answer some commonly asked questions. And I have my students do this in table groups so that we can find out the solution to these problems right away instead of having to individually research them. So I give them these 5 different questions, one per table group. I give them approximately 2 to 3 minutes to find a solution. We share it out, and then the entire class gets the benefit of all that information in a much shorter amount of time. The next piece is brought to us by our friends at Next Generation Personal Finance. I like to have them complete this bank statement activity, how to read a bank statement. It's a great activity. The link is in the notes as well as linked to this slide so that you can show and teach your students how to read a bank statement and understand what an overdraft would be or know how to read that bank statement for deposits and different types of fees and whatnot. Moving on to debit cards and credit cards, I ask, do you know the difference between the two? And many times students might have an idea, but they're not that confident in their answer. I gauge the pulse, again, using Pear Deck, using a slider function so that I can see they know everything about it or they don't know anything about how a debit card effectively works. I then created a scenario over the following slides that will take your students through what happens when they swipe either a debit or a credit card. Here we go. How does money work when swiping a debit card? Well, the first thing we need to do is we start with a student that works at a local business. We are going to say that they worked 30 hours per week. How much is their gross income for the week? Their total deductions are 30% of their gross income. How much is their net weekly income? Well, that depends on what their minimum wage is. And depending on what state it is that you work in, that could also change what that may be. Where I am, the minimum wage is $16.50 an hour right now in California in 2025. So I put $16.50. And then from there, we know that we're working 30 hours. So I multiply 1650 times 30. The gross income, as we discussed in Unit 1, would be $495 for the week. But if we know that only 70% of that is what's showing up as net income, I take that gross income of $495 per week and I multiply it by 0.7, leaving me with $346.50 that shows up in net income that gets deposited into my bank account. And that's what I'm using when I go to that store or restaurant to spend my money. And that student has an employer. We'll say that that employer is someone that banks at ABC Bank. And then the employer has to pay the employee after they've done their work. And let's say that the employee works at XYZ, or I'm sorry, has their account at XYZ Bank. Well, when the employer pays from ABC Bank, they direct deposit it, as we discussed in Unit 2, over to XYZ Bank, where the employee banks. Once that money is in the account of the employee, they've gotten paid, and they choose to treat themselves and go out to eat. The cashier when you are checking out for that meal, asks if you'd like to pay with cash, credit, or debit. And in this instance, we are going to start with a debit card. So when they swipe their debit card, it's going to ask them for their personal identification number. I always encourage my students to never share that number with anybody, no matter what. Debit card swipes will link to the money that is in your checking account, and it will automatically come out of that checking account and pay the vendor. That card terminal will communicate with their bank. So, for example, if I'm banking at XYZ Bank, they will ensure that terminal will quickly use technology to communicate with the bank at XYZ to make sure that you have enough money. They will initiate the transfer, but sometimes they might actually approve the transaction even if you don't have enough money. That's called overdrawing your account. When you overdraw your account, you're subject to overdraft fees. In 2023, these were the top 10 overdraft fees by bank, and it is a whopping amount. If you bought a $10 burrito somewhere and you overdrew your account, that $10 burrito, depending on where you bank, might now be a $47 burrito with that overdraft fee added on. What do you need to open up a bank account? Now, this could be subject to change depending on where it is that your student chooses to bank, but oftentimes they will need a social security number, an initial deposit, proof of address, and that's usually going to be something like a statement that says where they live. It might be a bill, like a utility bill. They'll have to complete some bank forms and some form of photo identification. Now that you know what you need to open up a bank account, follow along in one of the future units so you can learn how to credit card swipe is also accounted for because it's a little bit different.
We've covered quite a few of the banking norms. Here's some other banking considerations.
As a recap, we've discussed checking accounts, savings accounts, CDs, interest, FDIC, overdraft. We didn't really discuss an ATM, but that is also something that you can cover with your students, that your debit card can be swiped at an ATM or automated teller machine of your bank, often for free, but if you use it at a different bank, they will charge you a fee. Once you use that ATM card or that debit card at the ATM, you put in your personal identification number and you can withdraw cash. We briefly mentioned that there is a difference between a credit card and a debit card, and the credit card we discuss in a later unit. The debit card is the card that is linked to your checking account where money automatically comes out of whenever you swipe that card, the PIN being your personal identification number. And when you swipe your card in the machine, that's the point of sale machine. Your bank statement is part of that next generation personal finance activity where you learn more about how to read where your money is coming in from and where it's going to. There's a couple other additional banking considerations that you should think about before making a choice. There are many online banks out there that have lower business overhead because they don't have physical locations and they don't have tellers that are standing around, less air conditioning that's running, less lighting that is running, and as a result, oftentimes it allows more favorable savings rates because they pass that savings on to you, the consumer. These accounts are oftentimes called a high yield savings account or HYSA, which is usually FDIC insured, just like a traditional savings account, but it can earn as much as 2 to 4 or even more times the national savings average interest rate. Keep in mind that those rates do fluctuate and do change based on market conditions. I listed a few of my favorites down below: Ally Bank, American Express, Personal Savings, as well as SoFi Bank, and there are others as well. We move into a activity, and in this one it's a bank information hunt where your students will have an opportunity for you to identify or for them to select a bank of your or their choosing. And once you've assigned it to them, they need to do some research for their website and are on the website of that bank and find the answers to the questions for each of the sections. This allows your students to see in one page in a Google Doc exactly what are the fees that are at all of these different banks to help guide them in making the most educated financial decision to determine what makes sense for them. Another activity that we move into after doing that information hunt is taking the same bank from your hunt and now using that information to create a bank marketing brochure. I personally like to use the Canva brochure template maker, and I've linked that in the notes as well. That gives your students 6 clean panels, as well as I give them a student example slide in the notes too, so that you can refer to what other students that I've had have done in the past. And it allows them some opportunity for creativity to replicate what is some marketing collateral that a bank might likely try to persuade potential consumers with when hoping to acquire new people into their bank as customers. I use this slide for students to kind of recap everything that they've learned so far and make sure that they understand what's happening. I have them write a question, a comment, or need of clarification about banking. Next up is one of the crown jewels of the 10-unit assignment, and students love this and hate this at the same time because it takes them out of their comfort zone. I have my students use the bank that they research for their marketing brochure as well as that information hunt to call the bank after looking up one of their branches and ask to speak with somebody in new accounts. Once they call that bank, and it is worth noting, this is not a prank call. This is a fact finding research opportunity that is real world applicable, project based learning, where students will have multiple different roles. You'll have a sharer, you'll have somebody that is the recorder, the caller, and a person that will share out the findings to the class at the end. After making that call, you will find that students are all absolutely in awe. They're ecstatic because it's a professional adult conversation that they have to have. I close out with a reflection discussion. I usually do this with what's called a whip around, where students receive 3 words to summarize their call. Then we do one more where it's just one single student from each group in 45 seconds or less shares, would you open an account there? Why or why not? And how could the call have gone better? We close out this unit with a walking field trip to the bank if you have that luxury and opportunity, or if you can get a bus, by all means, that might be great as well. What I love about the walking field trip is that I work in proximity where we can actually do it within one long block period, so that my students and we can walk down there, go to the bank, talk to the bank manager, which I will facilitate beforehand, call them or text them once you have a working relationship with them, and then communicate what are dates, what are times that this could work. And then from there, they usually have a fun overview of what their bank does different than others. And I can usually knock out 2 banks in this walking field trip in one long block period and walk back to class without having any hindrance on any of their other classes. If you have that luxury, I promise you that is so valuable to them. And the kids have talked to me about it for years to come. If you do get the opportunity to go on that walking field trip, make sure that at the end you write a thank you letter for those banks, because they take the time out of their busy days to give your students that real world project based learning opportunity, and it goes a long way. Again, my name is Max Feldman with the Business Teachers Toolkit. I hope that this information helps you in some way, shape, or form and helps your students find that financial literacy opportunity to help them thrive.